Here. Will Saudi join the pack in extending the cuts? We've already heard from Russia on that front. Will we hear from Saudi as well? Natural gas prices, interesting. I want to show the European benchmark, which this might not be. But suffice to say that we have seen the natural gas price, of course, being moved around by the Australian conversation around strike activity. But also, we've seen the Norwegian gas market making some news with some outages there. We'll keep an eye on that. And the euro dollar at 107.91. This is post the US data. How vulnerable is the euro right now, given the state of the European data set that's coming through? More on that on the services side this week. Let's have a quick look at the futures picture then as we work our way towards the start of the European trading day. DAX futures up by 0.3%. FTSE futures up 4 cents. CAC futures up by 4 cents. So we are expecting to see some positivity at the start of trade. As I say, sentiment driven by China, but also the data on Friday perhaps allowing the market to rally risk assets a little bit further. At least you can find that interpretation in some of the data we got out of the United States on Friday. This is the start of European trading then. The Spanish IBEX up by 0.4%. The FTSE up by 0.3%. The pound up 0.2. The dollar on the back foot. But actually, that's just a mirror of what we saw on Friday's session, where we saw the dollar actually get a boost from some of that data stateside. The euro getting a boost then today, along with the pound. So retracing some of the moves that we saw during Friday. In terms of sovereign bonds and fixed income, we're seeing some selling there, some yields going a little bit higher. That was sort of the August theme. A lot of people asking, though, whether that is going to be the theme for September or whether we've seen a turning point there and actually yields globally are going to start coming down. This is the gas price. So that was the New York gas price that we showed just a moment ago. But this is the European gas price, which I wanted to put in and reflect because of what the news flow we've seen coming out of Norway, adding that to the existing news flow surrounding strike action in Australia. Let's have a look at the sectors then. And we've got the London market doing pretty well this morning. Again, a focus on commodities, even if some of those commodities are coming down. Oil prices, for example, taking a break from the recent rally, but it has been a recent rally. We're seeing a little boost for energy stocks, up 0.7%. Basic resources up by 1.4%. Interesting commodity M&A in the lithium space in Australia, worth digging out on the Bloomberg terminal if you're interested in that sector. Consumer stocks also doing pretty well. Banks doing well. The overall message being, I suppose, that all of these sectors are in positive territory. Sam Unstead joins us from the Markets Today blog. Sam, so let's start with the China vibes, and we're getting positive vibes, it seems, coming through from the China market. I guess we ask how sustainable this is, but we have seen some visible evidence in the property sector over the weekend. The policy initiatives, they're not a big bazooka, but they might be having an impact.
Yeah, I think you're right, and you sort of flicked at that a moment ago, Anna. Actually, it's the sentiment really that's getting the boost through this news that we're seeing some improvement in home sales in some of the major cities after some of the measures that have been taken on mortgages in China in particular. And I think, you know, we've been talking a lot about how this has been around the margins, that the authorities there have been sort of tinkering around, but everyone's waiting, as you mentioned, for that bazooka. Maybe it's starting to form into a kind of bazooka, and the markets are starting to see that these measures are starting to transmit and have an effect, and that does seem to be boosting sentiment more broadly today.
Yes, I am struggling for the right metaphor, but yeah, you wonder whether some of these drip feed policy tweaks. We'll work on this, Sam. We'll find the right one. How can they all add up to some sort of bazooka? That's a sort of valid question, I guess, we ask around the Chinese economy. Sticking with emerging market themes, I just want to dwell on what's going on in Turkey for a moment, just because there was a red headline across the Bloomberg terminal on this subject, so viewers might be interested. The Turkish August consumer price data rising 58.9%. So that's inflation of 58%. The estimate was 55.9. So coming in, it is possible to get upside surprise on inflation, even when expectations are for 55% inflation rates. So there we are. That's the emerging market story. We are seeing some movement in the lira as a result of that. It appears to be weakening a little bit on some of those news lines. So we'll bring the lira to you. There you go. You can see it weakening on your screen against the US dollar, which is gaining this morning. Sam, let's leave that one there for the moment, because the big picture, yes, driven by China and sentiment, also driven by our Fed conversation, though, isn't it? Yeah. Post the US data. I mean, the guidance that we got from Mark in the last hour was that there was nothing in the data to change his view about where we are on treasuries and the dollar. But there seemed to be a lot of focus on some of the outlying data points. It was quite a complex picture, really, coming through on Friday.
Yeah, I think that's right. But I think, again, I've said this to you so many times over the last few months, but almost every piece of economic data you get, there's kind of something for everyone. So if you can kind of take out of it what you need to. I think the jobs data on Friday in particular, I think that's right, that it didn't really change the picture. And that was kind of what people were waiting for, was just the ability to kind of bet now that a pause is coming and that there was nothing in there to derail that. I think you had, jobs number beat, but there was also downward revisions for the previous month, so that kind of cancelled each other out. Wage growth a little bit softer, unemployment a little bit higher. Everything kind of cohered to, I think, what people who are already betting that there might be a pause kind of met exactly what they wanted.
Yeah, absolutely. And whether there will be a pause or not, very valid market question. And increasingly, bond investors starting to get on board with what Mark was talking about last week, about maybe we've seen peak treasury yields, particularly at the short end. And I know BlackRock talking about the short end treasury market being a screaming buy right now, reflecting that. So, I mean, I guess there's a sort of back to school vibe to the end of August, beginning of September, and maybe this is a chance to rethink positioning around bond markets based on Fed expectations.
Yeah, I think, and actually, maybe not so much rethink, but kind of really solidify yourself as to what I think what we were already expecting up to this point. We've been talking already that September is going to be an extremely important month for central banking news, right? So there's still a lot of data to come, particularly over here in the UK. Got some really key data points coming, but really for everywhere. And what central banks are going to do next is going to be really important over the course of this month. And I think for bond investors, they have already, I think, positioned themselves for the most part, and now this is kind of solidifying it, and people are kind of sticking their flags where they're going to.
Okay, and talking of central bankers, we're going to hear from Andrew Bailey this week. What's our expectation there?
I think a lot of quizzing on wage growth. I think much more broadly, just a lot of quizzing about inflation. Inflation has come down a bit. It is cooling. It's doing what they were expecting, but it is still very high. And I would imagine that, these meetings are, we've often said, these meetings are often a lot more about the questions than the answers. And so I think you'll likely see a lot of questions coming through about how are you going to get inflation down to 5%.
Right, yes. And we heard it last week from a guest who talked about stagflation in the UK. And clearly they'll focus a lot on the inflation data, as you say, some success in bringing it down, but it still remains stubbornly high and higher than certain other G10 geographies. But on the growth side of things, some positive data gifted by the ONS, a revision upwards in some of the data that we've seen over past years. I mean, Andrew Bailey doesn't speak for the ONS, so that's not his remit, but I suppose there could be a focus on that side of things as well.
Yeah, it doesn't hurt. I mean, I think, yes, data was revised for 2020 and 2021. There were actually revisions going all the way back to 1997, so there was quite a lot of data to go through. But in particular, 2020 and 2021, the bounce back from the pandemic was stronger than expected. Certainly doesn't hurt Andrew Bailey's cause, but also I think more than that, it helps the government, who have been trying to push, this economic growth is going to be key for them. If they want to cut taxes at any point over the course of the next year or so before we have an election, economic growth is going to be essential. So, yeah, I would imagine that will come.
Does it leave more room for rate hikes, though, if the growth picture is not as fragile as we thought it was?
That's a good question. I think right now, so you have to remember that data is going back to 2021. Yes, it makes the previous picture look better. It will affect going forward, but actually the ONS as well said that it doesn't really affect anything at the moment. Yeah. Very possible that in 2 years we'll have a revision to that, and we shall see. But I think it does. Yeah, it does raise that risk. But I think really the key thing is still going to be wage growth. That's the key element that the BOE are watching.
Sam, thanks so much. Thanks for joining us. Sam Olmsted from our Markets Today blog. You can get more from the Markets Today team. The blog is available to you on the Bloomberg UK website. Click through onto the blog from there, or you can type TLIV go into the Bloomberg terminal. Let us get a check on some of the individual stocks on the move this morning. Joe Easton has a briefing for us. Joe, what have you got?
So Banca Monte de Paschi holding up in Milan at the moment, up around 1%, was slightly underperforming at the start of trading. Investors balancing up whether that company potentially moving back into private ownership more quickly than expected could potentially be positive rather than negative. But as I say, up around 1% at the moment. And Novo Nordisk gaining by about the same amount as the drug Wegovy launches here in the UK in a selected number of GPs, with also some demand from pharmacies as well, the biggest company in Europe by market cap. Then we've had some breaking news on CMC Markets this morning. This is the second worst performing stock on the UK market this year, down 50% due to a sell-off in some of their retail trading clients moving money out of that platform due to the cost of living crisis. They've got a new CFO just announced today, string of profit warnings, potentially the trigger for that one. Then Johnson Matthey, this is an interesting one, was the best performing stock in Europe on Friday, rose around 10% after the US company Standard Industries doubled its stake in the firm, and that one is ticking higher once again. Standard told me on Friday that this is a long-term value creation project for them, but Jefferies today saying that they think Standard could potentially bid for the whole company, so that one is moving higher once again. In terms of the real estate, we had a couple of notes out this morning. So Morgan Stanley, they've changed a whole range of their ratings. They go overweight on Hammerson. Meanwhile, Cofinimo and also the WDP are the underweight ratings, not as positive on those ones. They get downgrades. British Land, meanwhile, had a rating change at JP Morgan, but holding up in terms of that one there. There were some other ratings, quite a few this morning. We had in the UK, I think we had one from Schroders. There we go, Schroders moving higher. That one gets a positive move from JP Morgan. The bank likes that one. They've had a big outflow of some of their funds, the big UK firm, but holding up there. SocGen, a rare downgrade over at Barclays. And Pearson, meanwhile, the education company, MS says the fears around AI taking over education are overdone, so they move their price target higher on the UK firm. Finally, just a quick one on Nestlé. They are selling their peanut allergy drug business. It hasn't been very successful. It was part of a deal that they did a few years ago for around $2 billion, but they're selling it to a Swiss privately held company. Getting out of that one, Nestlé stock holding up around 0.3% at the moment.
Joe, thank you very much. Joe Easton from our equities team. Plenty of movers then on a day where we are without the United States. We remember that as we look ahead to the rest of the trading day. Let me just bring you some breaking news across the Bloomberg terminal. We have heard from China that Premier Li is going to attend the G20 summit. No mention of whether President Xi Jinping will be there, it seems, but certainly Li will be going. And it had seemed over the weekend that President Xi Jinping would not be going. He's set to skip this premier international forum, if you like. And according to our colleagues over in China, not entirely clear why. It could be due to diplomatic sparring with India, we understand. But of course, he has been a participant in the most recent BRICS summit. So we wonder if that has some relevance as well. So it doesn't seem as if he's going to be at the G20, but the Premier Li is going to be there. So Chinese Premier Li will attend the G20 summit. Coming up on the programme, we'll get back to Munich, the auto conference taking place there. Renault CEO Luca De Meo joins us. Lots of focus on China at that event. China competition from Chinese automakers, but also around selling to Chinese consumers. We'll be back to talk autos shortly. This is Bloomberg.
What do you worry most about your economy in Greece? And when you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights.
How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall?
That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg's Mike McKee sits down with New York Fed President John Williams at Bloomberg's Market Forum for an exclusive interview. Does he see more rate hikes? How soon for cuts? Find out Thursday at 3:30 p.m. Eastern, only on Bloomberg.
This is Markets Today. Just coming up to 15 minutes past 8 here in London, and European equity markets are making gains. No trading in the United States on treasuries or on cash equities. Futures are trading stateside and suggest a little bit of upside to Nasdaq futures, but no great moves there. Let us talk about what's going on in the auto space. Germany's annual auto show in Munich has always been billed as international, but this year it's leaning into that theme more than ever. Half of the companies attending are foreign, with many coming from Asia. The move reflects a broader push to by manufacturers from the East into Europe, posing a challenge to the more established European brands. Bloomberg's Oliver Crook, as we know, is on the ground for us at the auto show with a guest. Ollie.
That's right, Anna. We are now with Renault CEO Luca De Maio. Thank you so much for joining us here from the Munich Auto Show. And so we're here, the battle of the BEV, EVs in focus. You're unveiling a new car. What are you bringing to this war of EVs?
We're actually bringing a product that historically was very important for Renault. This is the Scenic. Car of the year in 1997, 5 million cars were sold, and we have reused this name on a pure EV car, which we think will be very important for the development of the EV market, because it's a car that actually ticks all the boxes to respond to mainstream European customers. So package, range, more than 600 kilometers. A lot of technology, etc. So I think that there will be a very important product for Renault, but also for the whole EV market.
And when can we expect to see them on the roads?
I think that, first quarter of 2024, we'll announce pricing by the end of this year. So I think that beginning of next year, we are in the market.
You've had very strong growth in Europe this year so far. How are you seeing the outlook changing right now with rates rising and kind of the macroeconomic picture getting a bit uncertain?
The market is very soft. But I think that in the case of Renault, one of the things that will differentiate us is that we're coming with one launch of a new car every month next year. So we have 12 launches in the year. So maybe because of the product effect, we could be anti-cyclical. That's what we foresee, but it's a very complicated situation. Although we see the market growing, but orders, etc., it's pretty soft.
It's slowing down. And do you see concern with Tesla is slashing prices everywhere? It's everyone kind of bringing their pricing down. Will you be able to maintain pricing, or do you think that that'll have to get some adjustment?
But I think that anyway, EV will have to go down in price. But to do this, we need to get them down in cost, and that's why we're doing the whole initiative of Ampere. We create a kind of a pure EV player, and one of the commitment of Ampere is to slash EV cost by 40% generation on generation. That's why we do it. So it's not a mature technology, so we'll have to invent a lot of things to reduce the cost, and then prices will go down.
On the road, so to speak. I want to talk about those costs. The raw materials are coming down for the battery components. So do you think that is sort of the story now, that those prices are going to continue to come down? Supply chain is stabilized. Do you see the outlook for that sort of more solid?
Yeah, raw material are coming coming down in terms of, let's say, cost and price. So probably we'll see the effect also on our cost in a few months, because you always have a delay between one thing and the other. So that makes us optimistic. So I don't think we have to. I think we have to avoid entering a price battle in the short term. You have to remember that incumbent manufacturers, they probably have a lot of limits. But one of the things that normally they sell majority of the cars in Europe is combustion engine. So in a moment where a pure EV player reduce prices on EV, he does it on 100% of the range. For us, it's like 10-15%. So I think we have to protect the business, also for the value of the customer. When you reduce and you start to get into discounts and stuff like this, residual value go down. It's not good investment for the consumer.
And you talked about the Ampere IPO, so the timing, the beginning of next year, I believe. And so talk to me through the strategy. What kind of value, how does it fit into the strategy for Renault more broadly, that IPO and spinning off that unit?
Look, I think our opinion is that EV will be a completely different sport, different supply chain, different suppliers, different technology, et cetera, et cetera. So it's like, you've been playing tennis for 100 years, and then you want to play paddle. You think you can play paddle because you play tennis. It's a different thing, different rules. So we're trying to specialize a bunch of people on the EV and software. Okay, so we create a company that it's designed to respond to the Teslas or the Chinese of this world. So that's what actually I think that Ampere is probably the most substantiated and holistic response to the challenges that we get on the global competition.
And I also wanted to ask you, also longer term, there's some pessimism out there. There was a note out of UBS cutting kind of Renault's, the sell rating on Renault, and looking really at kind of a very challenging moment for the legacy automakers. How do you sort of combat that narrative? How do you build investor confidence to kind of get that share price back up?
Look, we have out of 21 analysts, we have one that changes mind into the thing. So I think we have to respect everybody's opinion. As Oscar Wilde used to say, the news of my death was largely exaggerated. Like 3 years ago, we were in the worst times of the history of Renault. We did in 2020, and now we actually deliver the best results in the history, 125 years of Renault, and we've been fighting hard as a team. So of course I can't convince 100% of the people, but my job is not to make speculation or assumption on the future. I have to build it every day. So, and we will be fighting.
Luca De Maio, thank you so much for joining us on Bloomberg. That was the CEO of Renault. The rumors of the demise far exaggerated here in the Munich Auto Show.
Okay, channeling Oscar Wilde for us. Thanks to Luca De Maio, thanks to Oliver Crook on the ground there in Munich with the Renault CEO. So the move from internal combustion engines to EVs is like going from tennis to playing paddleball. That just illustrates the different skill set required. Coming up on the programme, we'll get an update for you on Italy. Italy's governing coalition is fighting over plans to sell a stake in Monte dei Paschi, the world's oldest bank, as it tries to bolster public finances. More on that story next. This is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
We've all been there. You get invited to go to Kyrgyzstan, where you're turned into a YouTube kids show star. Build a satellite and play a game with a goat. The point is, Hello World is back, and you should watch it. Thursdays on Bloomberg Originals and Bloomberg TV.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Probably yes, I am in favor, my party is in favor of the privatization, not only the Monte Paschi Bank, is for have more money for the state in our budget. We need to work in this direction. The debate is open. We need to decide in which sector we need to achieve these results.
It's at Italy's foreign minister on possibly accelerating the sale of the stake the government holds in Monte dei Paschi. Let's stay with that story because Italy's governing coalition is fighting over plans to sell a stake in the world's oldest bank, as well as other state-owned assets, of course, as it tries to bolster finances stung by a souring economic outlook. Let's get to Bloomberg's Milan bureau chief, Tommaso Ebhardt, who joins us. Very good to see you this morning, Tommaso. Why is Italy then discussing the sale of Monte dei Paschi and other assets?
Sì, buongiorno a tutti da Milano. As you just heard, the Deputy Prime Minister Tajani was quite clear with us in Chernobyl. Italy needs to sell assets and is evaluating to accelerate the sale of Monte dei Paschi. Why? They need cash. The economy is doing worse than expected. The deficit might be wider than expected. They just have announced that they will buy a 20% stake in Telecom Italia network, so they need to sell other assets. So that's why it's again hot news.
It is hot news. And why are Meloni's allies then fighting over the sale of the world's oldest bank? If there's the intention to improve the government's fiscal situation, why is there a fight over this?
That's quite interesting. So the words you we just heard by Tajani caused a stir among Giorgia Meloni allies. Essentially, you have Tajani, who is the successor of Berlusconi, so the more pro-investor party in the coalition, say we need less state into the economy. Then you have the League by Matteo Salvini, who actually want to have its sale on how is going to end the saga of Monte dei Paschi. The League have said several times that they want to create a third big Italian banking group, so they have an interest there. They also have the mayor in Siena. The League won the mayor game in Siena this year. So it's quite interesting. There was a big reaction, and yesterday the Treasury Minister Giorgetti, who is one of Salvini's main aides, said, wait a bit, we'll do it in the right time.
Okay, thanks so much. Thanks for joining us, Tommaso. Good to get the update. Thanks to Bloomberg's Tommaso Ebhardt joining us there with the latest on Italy. Coming up, Ukraine's President Zelensky is removing his defense chief. We'll get an update. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Bloomberg's Mike McKee sits down with New York Fed President John Williams at Bloomberg's Market Forum for an exclusive interview. Does he see more rate hikes? How soon for cuts? Find out Thursday at 3:30 p.m. Eastern, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today, 30 minutes into the European trading day. Let's get your top stories. European stocks rise, boosted by hopes that the Fed may soon end its tightening campaign and that China's latest property measures will help support the world's second largest economy. Shares in Monte dei Paschi are trading higher after Italy's Deputy Prime Minister tells Bloomberg the country may look to hasten the sale of the lender. Plus, European car makers accelerate as the race to dominate the global EV market heats up. We are live from the IAA car show in Munich. Welcome back to the program, everybody. Then let's have a look at European equity markets and where we are trading right now. These are the major European indexes. Stocks Europe 600 up by 0.7%. We are seeing gains across the board, really. All of the geographies in positive territory today. So the DAX, the FTSE 100, the CAC, all trading higher today, boosted by sort of twin drivers. One is around Fed expectations, and perhaps the data on Friday allowing those expectations of a pause from the Fed to solidify in markets. We've also seen positive sentiment coming through from China as a result of the evidence we're seeing in some of the residential markets that property policy changes around mortgages and deposits last week could be having a very short-term and immediate boost to sentiment there. So that's the drivers of sentiment this morning. And let's have a look at the sector picture and show you where we are. The big picture takeaway around sectors is that they are all positive. So not one sector in Europe is in negative territory today. We see basic resources in particular doing well, up by 1.3%. It's the usual names getting a boost there from the China story, in particular around the property side of that. Energy not doing too badly this morning. Consumer staples also doing pretty well. Consumer products rather up by 1.2%. Watchmakers amongst the biggest gainers there. Let's move on to some politics for you and the war in Ukraine. Ukraine's President Zelensky says he's removing the defense chief who has served throughout Russia's invasion. Joining us for the latest is Bloomberg's Europe correspondent Maria Tadeo. Maria, what is behind this move then? And what could it mean for the counter-offensive that Ukraine has been pushing?
Yes, Anna, good morning. And in fact, there is now a tweet from Ukraine's defense minister, maybe we should say former defense minister, Reznikov, who says he has tendered his letter of resignation. And he also says, quote, "It has been the honor of a lifetime to serve as defense minister in Ukraine." Obviously, this was an individual, just to remind everyone, who had been at the top of this ministry for the entire war ever since it started in February, almost 2 years ago. Now, Anna, we should note that there have not been allegations, personal allegations, that he personally benefited from any of these contracts. The issue here appears to be systemic when it comes to the ministry itself. There had been criticism, and this was reported almost now for weeks, about contracts, particularly when it comes to food, some of the uniforms, some of the winter uniforms, that the issue here appears to be that the Ukraine defense minister may have overpaid. And of course, we know that when you overinflate budgets, then you have cash swirling around, and that may lead to corruption. We should also point that President Zelensky yesterday night, in that video message that he puts out every night, he said that this was a ministry that needed, quote, a new dynamic within the government, but also within Ukrainian society. Now, in terms of the counteroffensive, will this have any implications on the battlefield? Anna, the reality is, defense minister is not really involved in the front line, not so much as a general. So I doubt very much that that would change anything meaningfully on the front line. But this is really about two things. One is Ukraine, which has been a massive recipient, of course, of funding, aid, weapons, wants to show to allies that it's taken corruption seriously, that there is value for money, and that every money that they get, every cent that they get is used in a way that is efficient on the front line. And the second one, heavily connected to it, is a political aspect to this. Remember, President Zelensky has said for a year that he will make tackling corruption in the country. It has been a drag on the reputation of Ukraine, one of his top priorities, especially in this context of European Union membership. Remember, Ukraine wants to join the EU. They want to open accession talks this year. And one of the fundamental issues where the European Union wants to see progress is precisely on being heavy-handed on corruption.
Okay, so corruption in focus there with that move. Elsewhere, we know that the Turkish leader Erdogan and President Putin of Russia are set to meet today. I understand this has to do with grain, but what is at stake? What makes Erdogan instrumental in moving things forward on the grain deal?
Yes, Anna, and President Erdogan now heads to Sochi. It's interesting to see that it's Erdogan that's making the move, because remember, for weeks there had been speculation that maybe it was Vladimir Putin who would go to Turkey. Now we see that it is the Turkish leader that goes to Russia. A lot of this has to do with reinstating that grain deal. Remember, Russia pulled out of it unilaterally, not just pulled out of the grain deal that was brokered by the United Nations and President Erdogan too. They also said that any military cargo, any ships would be seen as military cargo and potentially become a military threat and a target. Ukraine also responded by doing the same. So obviously we've seen this instability in the Black Sea. Now, President Erdogan has said he wants this deal reinstated. The United Nations wants it reinstated. The European Union too wants it reinstated. So he's going with that message. What makes Erdogan such a crucial player here is that Vladimir Putin has been isolated by the Western leadership. The two contacts that he maintains on the international front are essentially Xi Jinping of China and President Erdogan. President Erdogan is also seen by Ukrainians as the closest you can get to a neutral mediator. Remember, the Turkish have been accommodating to Ukraine too, so he's almost seen as a man that if anyone can, it would be Erdogan that can bring this back together and put this deal back on the table and reinstate the grain deal, which again, we should note, the United Nations credits for having exported more than 30 million tons of grain.
Yes, we've already seen Turkey play a crucial role in these grain talks, haven't we? Along with, of course, as you say, with the United Nations. Maria, thanks very much. Bloomberg's Maria today joining us there with the latest on developments around Ukraine. And later today, Maria will be speaking to Ihor Sogfa, who is the chief diplomatic advisor to President Zelensky. That conversation coming up a little bit later on in programming this morning. Now, a crisis is brewing in the European rental market, and it's also a major political issue. Bloomberg's Alice Cantor explains.
Across Europe, a crisis is brewing, one that is set to snowball and become a major political issue, and one that threatens the roof over your head. The price of rent has shot up across cities in Europe, but what's behind this? At its core, it comes down to one of the most fundamental concepts in economics, a mismatch between supply and demand. That's whipped the market into a frenzy. Too many renters chasing a dwindling stock of properties, with the poorest bearing the brunt. On the demand side, a major factor is migration. More people than ever are being crammed into Europe's biggest cities, driving up the demand for rental properties. Brexit, the war in Ukraine, and the unraveling of COVID restrictions are all factors causing more people to move. Higher mortgage rates have also caused the demand for rental properties to rise as home ownership becomes more unaffordable. On the supply side, landlords facing higher mortgages have opted to sell up, chipping away at the rental stock and worsening the crisis. So why not just build more houses? Well, that's easier said than done. High inflation has driven up the cost of materials, hampering construction as home builders feel the pinch. In Europe, these factors are multiplied because of the number of historic and low-rise buildings, and cities tend to be relatively small compared to US cities. It's a combination of factors which is turning up the heat on the rental market in Europe. It threatens to exacerbate inequality and has already begun to stoke political tensions, including in Lisbon. It's a perfect storm for the rental market, and it shows no signs of abating.
Bloomberg's Alice Cantor reporting on the rental market crisis in Europe. Coming up on the programme, from BlackRock to PIMCO, bond investors are betting that Fed hiking is over and calling buy on the 2-year Treasury. More details next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point. What is the lesson or the observation?
This is Markets Today. We are 41 minutes into our European trading day. No stateside trading today. Of course, it's Labour Day, and so European equity markets will be going it alone later. And the handover from Asia was positive around the China story. Expectations of a Fed pause seem to be solidifying in markets. We'll talk more about that in a moment. And the picture for equities then is a positive one this Monday morning. Let's get back to the autos theme. Volkswagen is adding improved design to a string of changes aimed at enticing more buyers as sales of electric models in China flag and competition intensifies. The group CEO, Oliver Blume, spoke to Bloomberg's Oliver Crook at the Munich Air Show.
The auto show in Munich, the IAA, is a great opportunity, first of all, for the German automotive industry to show the progress in terms of technology. But we have guests, visitors from all over the world, and for us it's a good opportunity to share experiences, how we will develop the mobility of the future. In terms of Volkswagen Group, we have the opportunity to show the progress in Volkswagen Group. I'm in charge since 1 year, and yesterday, the group media night, we presented the progress of our 10-point plan, how we are, what priorities we are taking in terms of products, finance, regions like China and North America, software, technology, our platforms, mobility services, and sustainability. And so for us, it's a huge opportunity also to show a glimpse what products our customers can expect in the future. Very promising, and I'm looking very much forward to it.
Right, and a year is a long time in the auto industry, particularly right now. A year from now, what will you be hoping? Where do you expect Volkswagen to be, and what would you want to be speaking about at the Munich Auto Show then?
Yeah, we are updating our existing platforms in terms of electromobility. For example, the MEB in Volkswagen called MEB Plus. Yesterday, we have shown a glimpse with an iconic GTE brand, what customers can expect in the middle of this decade. Next year, we will come with the new platform PPE for Audi and for Porsche. In the background, we are showing the Audi Q6 and driving this car, testing this car. It's so promising and exciting what we bring there. And then developing fast our future unique platform, SSP, with a lot of stunning projects. And so I think you can expect a lot from Volkswagen Group during the next years.
And what is the consumer changing? What are they demanding from you now, and how are you meeting that demand?
We are in the middle of the transformation, and it is about electrification, digitalization, connectivity, autonomous driving. And I think Volkswagen Group is well prepared. On the one hand side, we have traditional strengths in terms of driving abilities of our cars, the high quality level we do have. Then yesterday we announced that we move Volkswagen Group to a design-driven company. We are very strong in design, and that will be an important differentiating factor for the future. And combining this with new technologies, developing our platforms and combining this with partnered solutions in the different regions of the world, being able to offer the ecosystems our customers are expecting in the different regions of the world.
That was Volkswagen Group CEO Oliver Blume speaking to Bloomberg's Oliver Crook, and we will get plenty more on the auto sector over the next hour or so of programming. Let's talk about what's been happening in markets. Ben Ram joins us now from the Markets Live team, with his thoughts. Good morning to you, Ben. Very nice to see you. It seems as if risk appetite being supported by solidifying expectations of a Fed pause. Is that the way you would describe sentiment in markets right now?
Morning, Anna. That's definitely the prevailing sentiment in the market. There's no question about it. After the labor market data on Friday, the markets are now thinking that the Fed will pivot in May next year. We don't know yet about that because, what we got from the data is incremental news that the US economy is losing momentum. But what we haven't seen yet is that final push, that inflection point that shows that, okay, this is that point. We are not yet there. And I think that the long tail of the US economy is showing, and we may be in that bit of a holding pattern for a long time. Let's not forget that at the start of the year, it felt like the Fed would start cutting rates by in the second half of this year. That, of course, hasn't played out according to script, and we may continue to be in that mode for a while longer.
And something else that's supporting sentiment this morning, it seems, for risk assets is the news around China property. And some of this news flow actually dropped last week, didn't it, Ben? But then we're seeing some very real-time, very immediate impacts of changes in, for example, deposit rates for Chinese property that are having a big boost on sales already just over the weekend. Are you surprised by how we can see some impact of some of these seemingly drip-feed policies?
It's a bit of a drip feed, agreed, but I think what we have heard this morning on the property sector is a news that's in the right direction for China, because what we heard last week was about the stocks, was about them backstopping the stock markets, backstopping the currency, and that's not what is needed, because they don't need to address sentiment around these assets. They need to address the real economy, and what we heard today goes in the direction of addressing those real economy. We know that the property market is in the doldrums, and they need to face up to that reality, and that's what they seem to be doing. Later this week, we get export data out of China, and that is likely to show some more weakness, which they need to address by a weaker yuan. But if you look at the yuan fixing this morning, Anna, they actually fixed it stronger, which is not what you need in an economy like this. You need a weaker fixing. And if you look at the spread between the offshore yuan and the yuan fixing, that's almost 900 pips, if not higher. And that shows the market's belief that the yuan needs to weaken here. And that's probably what I would be looking for next.
Yeah, really interesting the way we've seen these policies perhaps moving in opposite directions, with the PBOC cutting rates over recent weeks and authorities at the same time looking to support the currency. Really interesting to watch that. Ben, thanks very much. Ben Ram from our Markets Live team. Remember, you can get up-to-date analysis and insight from Ben and the rest of the Markets Live team. Mark Cudmore and others. MLIV Go is the function to use on your Bloomberg terminal. Coming up, we'll be back in Munich for the IAA Auto Show. We'll be speaking to the CEO of Opel Vauxhall. That is next. This is Bloomberg.
Expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back. Let's get back to the car theme. A battle between European and Asian automakers is playing out at Germany's biggest auto show this week. Around 40% of companies attending Munich's annual car show are from Asia, with a large contingent from China. The move reflects a broader push by manufacturers from that region into the heart of the European market. What does that mean for European producers? Bloomberg's Oliver Crook joins us now from the auto show with a guest. Oliver.
That's right, Anna. Let's find out. We're joined now by Florian Hurdle. He's the CEO of Opel here, and we've got a beautiful concept car behind him. Tell us a little bit about what is going on in the design here and where you're positioning this car.
Yeah, good morning, Oliver, and it's great to have you on the stand. What we're doing here with Opel this year at the ERR Mobility is we're giving a clear view of what Opel will be doing in the future. So the car behind me is our Opel experimental concept car, and that car shows how, starting from 2025, we will go into the next step of our electrification journey, making full battery electric cars on modern BEV-only platforms, which allows us to bring new concepts. And this is what we do, what we illustrate this time with the Opel Experimental. So it's a great day for us.
And when will I see it on the streets?
Yeah, I mean, you will see a lot of what we show in this car going into our serial production, and that's very important to know. We have a strong history at Opel of making concept cars which open a next chapter. The last was our Opel GTX, a car that opened the current chapter of design and concepts for Opel. And with the experimental, we're going the next step. So yes, many of the things you will see here will go into production. The design language that you see here, the clear compass signature of Opel, the visor in 4D technology, many more things you will that will shape the future of the Opel design. Yes.
And I want to talk about the EV market more broadly. Yeah. How is it holding up now? There are a lot of headwinds in the global economy, whether it's rates, whether it's a slowdown globally. How is the EV market holding up?
Well, the demand for BEV is continues. There's no doubt about that. In Europe, this year, 13% of all new cars were battery electric. Last year, it was only 10. That's a very clear trend. And within that market, Opel is growing. Opel sales are up this year by 12%. And the battery electric only sales are up 34% year over year. So there is a very clear dynamic. Now, you mentioned headwinds. Of course, that's not a long and stable road. So we consider the move to electromobility to be a move that needs to be shouldered by society, not just by car manufacturers. And we need a lot of support, obviously, from governments in terms of regulatory framework, but also in terms of purchasing support in order to get to the move to electromobility.
Are you confident you have that kind of support? Where if you were trying to give advice on to regulators, to policymakers on how to retain production and to encourage the European auto sector, what would you say?
There's really two things. First, the car industry is a long-term investment business. So we need to be able to plan and to work with long-term commitments and long-term orientations given by the governments. That's the case in Europe today. Then we need stable frameworks in terms of support at the purchase. That has been a bit more volatile in the past, not only in Germany, but also in other countries. And it is important for our customers to understand that they can plan with support in these first years of the ramp-up of electromobility, where the cars are still very expensive to produce.
And you say there's a lot of demand. There's also increasing amount of supply from competitors all over the world. Many of them are here. They're from China, and they're really trying to introduce themselves to the European market for the first time. How do you view that competition?
Well, you see, the car business is a highly competitive business and always has been. So that's not new. Now, of course, this transformation to electromobility is the most fundamental transformation that we have seen since the beginning of the industry, and it leaves a lot of space for innovation and for new ideas, which is great. And we at Opel, we consider this transformation an opportunity for us to grow and to become more relevant. So that's good. Then, of course, there's new players coming to the market. You mentioned China, it's true. What is important to us is that in Europe, we work on a relatively high cost base. So if we want to continue producing cars in Europe, which is what we do today in Opel, we manufacture our cars in Germany to a great extent, but then we need to have competitive conditions and tariffs within the prices, not tariffs, within the country. So electricity costs are high, salaries are high in Germany, and all support in that direction will make it easier for us to keep the industry in Germany.
Florian Hurdle, thank you so much for joining us today on Bloomberg. That is the CEO of Opel talking to us about this revolution really in the EV industry and what is necessary to keep the European automakers relevant and to charge ahead into the future.
Oliver, thanks very much. Bloomberg's Oliver Crook with the CEO of Vauxhall and Opel there, talking about what is needed, what help is needed for the EV sector and ways to keep production in Germany in particular. Interesting to keep an eye on the European car makers then. We can see the parent of Vauxhall, Stellantis, up by around 1%. Other automakers look like this: BMW, Volkswagen, Mercedes, all up around 0.5% to 1% today as we keep our eyes focused on any new announcements coming to us from that auto show in Germany. That is it for the Markets Today programme. You can get insights from us and the team from the Markets Today blog. Go to the Bloomberg UK website and click through to the blog, or you can go to TLIV Go on the Bloomberg terminal to find the blog there. European equity markets without the US go a little firmer this morning. The pulse is up next. This is Bloomberg.
top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning with the conversations that matter. Here's what's coming up on today's programme. European stocks are lifted by China's latest stimulus measures and wages US interest rates may be approaching a peak. Italy's Deputy Prime Minister tells Bloomberg the country may look to hasten the sale of Monte dei Paschi amid Rome's proposed move to offload some of its holdings. Plus, Ukrainian President Volodymyr Zelensky overhauls his wartime cabinet by removing his defense chief. We will hear from Zelensky's chief diplomatic advisor later this hour. Welcome to the programme, everybody. I'm Anna, in for Francine this morning. Let's have a quick look at where we are across these European equity markets. So the European stocks market is going in alone in the sense that it's without the US, so will be alone as we go through the trading day, of course, with Asia for the start of things. And the handover from Asia has been pretty positive. You can see European equity markets then moving higher this morning, up by 0.6% on the FTSE 100, the CAC and the DAX, also making decent gains today. A couple of drivers of sentiment. One of them is the property sector over in China, and the other is expectations for a Fed pause. Both of those really hangovers from last week, and we've seen some really interesting evidence of success at stimulating demand for housing in the Chinese market. So we'll get a briefing on that in just a moment. Let's have a look at some other assets for you just to get a broader take on where we are across markets. So this is the Stocks Europe 600, then up by 0.7%. Basic Resources going a little bit higher, incidentally, on the back of that better news out of China. S&P futures, we put them in here because they are still trading, but of course no cash trade today because it's Labor Day. So enjoy your day off if you are over in the United States and not working today. This is the Brent crude price. It is at 88 with an 88 handle, 88.68. We've heard from Russia, of course, and we know that they are going to be continuing their production cuts and dialing down production. We're waiting to hear from Saudi Arabia as to whether they will extend those production cuts into October. The expectation is that they will. And so with that expectation, that has been driving the price of oil a little bit higher. Country Garden, this has been a mover over in the Chinese session. That stock considerably higher. There you go. We've got other Chinese property stocks for you as well. So Country Garden, Evergrande, and others all moving higher. Let's get to the source of that positivity around Chinese property today. So Chinese property stocks surging earlier as the nation rolled out further support measures, including lower down payments for home buyers and looser mortgage rules in major cities. Joining us now for more on this is Bloomberg's Kevin Kingsbury, who is over in Hong Kong for us. Kevin, very good to have you with us. So what exactly is outlined in these measures? Because we heard about this last week, didn't we? But it's taken through the weekend, I suppose, we've seen some concrete evidence that these measures can have a real impact.
Right. Well, first, Anna, this is really a two-day rally because Hong Kong stocks here were closed on Friday because of the typhoon. So we've had gains today that measure just the mortgage moves that were announced late last week about cutting down payment requirements. And like you mentioned, also some initial signs that both new home and existing home sales have surged over the weekend down to the back of these mortgage announcements.
Okay, and that's part of it, the fact that we saw the reduced down payments required in certain Chinese cities, and that's having a visible impact. We've also had some better news out of Country Garden. It had become the latest poster child for troubles in the property sector.
Yes.
And this particular developer has just days to avoid a default on a dollar bond, but it has managed to pay one of its other due bonds. What are we hearing? What's the latest to play out here?
Like you said, we have this ringgit bond that was wired money over the weekend. Country Garden also got a yuan bond extended for over 3 years. So it's got these ability to kind of stretch out these payments. And then we also have these $2 bonds that are due later this week. Now, because of the moves we've seen over the weekend, the chances are they're going to pay these bonds over the next few days. And then there's nearly $2 billion worth of bond obligations for the rest of the year from Country Garden. So while there's some good news here over the weekend and potentially later this week, there's still much more to go as far as them being able to kind of climb this debt wall that they're facing.
Okay, so we continue to watch the ability of that business to pay what it owes. What about what the leadership in China is saying? She's speaking over the weekend, I understand, vowing to open up markets. What exactly does that mean?
It's a good question because we've heard this vow year in and year out from the same gathering that he made these announcements with over the weekend. One analyst put it as promise fatigue. Are we kind of at that point where we hear all these words from government officials from Xi on down, and where's the kind of the follow through? Now, obviously here with the mortgages, we've actually had some concrete moves that have been announced in recent days. The markets, investors, they really want to see more action, more kind of steps to really get this economy going again, because after the GDP forecast that was announced, the latest readings, there's just uncertainty as to where exactly is this economy going, and does the government have the stimulus measures in place to kind of really get the 5% or so growth that the country's been targeting for so long, kind of get back to those levels.
Kevin, thanks for the briefing. Bloomberg's Kevin Kingsbury in Hong Kong with the latest on the property sector and other moves in China. Now, the August payrolls data came in bang on target, and the softer tone in recent data has helped the Treasury bond market to rally. Joining us now for more on this, the data and the wider market moves, Bloomberg's Sam Unstead with us from the Markets Today blog. Very good to have you with us, Sam. So the latest US jobs report then signaling, well, on the one hand, solid hiring data, but slower wage growth. Does that give the Fed enough sort of wiggle room to pause? Is that where we're looking?
So I think overall, it's almost exactly what markets were looking for, right? So jobs did beat, but there were downward revisions for the previous month, so that kind of cancels that area out. Wage growth is cooling, unemployment's ticked a bit higher, more people coming back in, and everything else is sort of cooling, but not too much. So it's a kind of controlled cool down in the economy, and I think that's exactly what people have been looking for as the monetary policy transmits through, and it's not having the kind of damaging effects that maybe people had initially thought could occur.
And if you are seeing the economy cooling, you might be expecting yields to stay where they are, or perhaps to move a little bit lower, given the recent rally we've seen there. And with that in mind, I see that BlackRock's Rosenberg says that 2-year notes are, quote, a screaming buy, which is pretty eye-catching language to use, isn't it? Does this signal this maybe signals that they think this is the end of the Fed hiking cycle? I
think there seems to be a growing consensus, that at least for now, and certainly for the next meeting, that there is space now to pause. I think what may now be being looked for is a kind of very light hawkish hold, if you like. So yes, a pause now, but then leaving the option open that if things do heat up again, or things start to the data that the central banks are so dependent on right now, if that starts to go in the wrong direction, that there is room to shift policy again.
Okay, Sam, thanks very much for joining us. Sam Unstead with us there from the Markets Today team with some focus on the factors that are moving thinking around bond markets. Coming up, Italy's governing coalition is fighting over plans to sell a stake in Monte dei Paschi, the world's oldest bank, as it tries to bolster public finances. More on that story next. This is Bloomberg.
do you worry most about your economy and Greece? And when you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
Welcome back. This is The Pulse. I'm Anna Edwards, in for Francine Lacroix this morning. Let me just give you a quick update on what's going on in the markets. The Stoxx 600 is up by 0.7%. The FTSE 100 up by 0.6%. The CAC on up 7 cents. So we're making modest, decent gains really across European equity markets this morning. We are waiting for, we won't be joined by the United States a little bit later. We're not going to get them into trading because, of course, it's Labor Day, so that's not going to happen. But we are going it alone in the afternoon part of the European trading day. But European equity markets are a little bit firmer this morning. The combined push of better sentiment coming through from China and also the US session and the data that we saw there and Fed expectations. Let's turn to China now. In terms of security concerns, Huawei, China's top chip maker, have built an advanced processor to power its latest smartphone. It's a sign that Beijing is making early progress in a nationwide push to overcome US sanctions. Huawei has been at the center of intensifying US trade curbs on Chinese businesses, which Washington says are based on national security concerns. Let's speak now to Bloomberg's Peter Elstrom, who has details here. So, Peter, strip this story down for us if you could. Bloomberg worked with a specialist research firm on this to take apart this new phone, this new smartphone from Huawei. What did the investigators find?
That's right. So Huawei quietly dropped this phone last week into the market, and it caused quite a stir. It's an advanced phone. It's called the Mate 60. But there were a lot of questions about exactly what kind of technology was inside the phone. Huawei had to back out of the smartphone market because it didn't have access to the most advanced chips, the kind that would power, say, the iPhone, for example. So it wasn't clear exactly where it got these chips or how it got these chips. Unlike most technology companies that love to talk about specs, Huawei didn't say anything about the specs here, especially the key ones. So what we did is we bought one of the phones, and then we worked with this firm, Tech Insights, which does breakdowns, teardowns of products professionally, and they looked at the components inside the phone, and what they found was very, very interesting. They found that there is an advanced semiconductor inside the phone that's made by SMIC, that's a Chinese chip-making company that's not known to have these kinds of capabilities. They were able to make the phone at what's called 7-nanometer technology, which is quite advanced. And in that case, they were able to produce a processor that was much more advanced than people had anticipated SMIC was actually capable of doing. So it's a sign of China's progress in getting around some of these U.S. restrictions on the kind of technology it has access to, particularly for a company like Huawei, which is blacklisted by the U.S. government.
Yes, I was going to ask, so why does the speed of the chips inside this Huawei phone, why does it matter? And you've given us a bit on that already. It signifies then that China is moving faster than the rest of the world had anticipated in moving to these faster chips. Is that the basics of the story?
That's right. That's right. The U.S., you'll recall that last year the Biden administration imposed export controls on China. And it was trying to draw a line in the sand where China would not have access to chips that were more sophisticated than 14 nanometer, which is about 7 years beyond the latest cutting-edge technology. And now China has shown that actually internally in China, it can make these 7-nanometer chips, which are only about 5 years behind the latest technology. So it's a step forward. There's much that we don't know about this chip. We don't know what kind of volumes Huawei and SMIC can make together of these chips. We don't know whether they can make them at a cost that's competitive on a global market. But it is a sign that they're able to make some progress in this area that's been so contentious, and is something where the U.S. has tried to limit their ability to kind of delve into these kinds of technologies in the future.
Yeah, and really interesting, Peter, that they dropped this phone so quietly then, given the obvious interest in that subject. So will this affect the geopolitical clash then between Beijing and Washington? If Beijing is moving faster on its own than anticipated, does that limit the effectiveness of the Washington sanctions?
Well, it certainly is going to get the attention of the U.S., the Biden administration, and particularly the Commerce Department, which has been at the forefront of trying to impose these restrictions. It's a sign that the sanctions that they have in place right now may not be as effective as they thought they had been in the past. It seems like they are making some progress here. Inside of China, state media picked this up right away, and they kind of trumpeted the accomplishments. I think they're trying to show that they feel like they can make progress in technology, and semiconductors in particular, even without the support of the United States or even with these U.S. sanctions, which are very, very severe.
Peter, thanks so much. Bloomberg's Peter Elstrom in Tokyo with the latest on these Huawei developments. Coming up on the programme, we'll take a look at what's driving the rental market across Europe, what unites it, what differences do we find. A big Bloomberg deep dive into rental markets in Europe. This is Bloomberg.
tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
party is in favor of the privatization, not only the Monte Paschi Bank. Is for more money for the state in our budget. We need to work in this direction. The debate is open. We need to decide in which sector we need to achieve these results.
So which ones are you looking at? Monte Paschi and what else?
That there are a lot of state building, former barrack. It's possible to work in this construction sector and for having more money, but we need to decide also the services. My idea, the idea of my party is to privatize the services in the ports, for example, but also to privatize the services in the local level.
Minister, when you say that you want to accelerate the sale of Monte Paschi, how quickly could that happen?
We will decide, I think, in short term on this. This is a job of the Minister for Economy. He will propose, I think, in short term, 2 or 3 ideas, and we will decide in short term. I think we need to do it because for me, we need less state and more companies in the economy. I am liberal. For me, is crucial. Also for attracting new investment from abroad, we need to organize a revolution for the liberalization reform, on fiscal reform, on justice reform, civil justice reform, less bureaucracy, less bureaucracy, because there are a lot of money, also Italian money in the banks. If we want to involve the private sector, we need to organize this revolution in favor of reforms.
That was Italy's Deputy Prime Minister and Foreign Minister Antonio Tajani speaking with Bloomberg's Francine Lacqua, talking about how the government should accelerate efforts to sell a controlling stake in the Italian bank Monte dei Paschi. Well, Tajani's comments to Bloomberg at the Ambrosetti Forum have stirred some controversy. They've put him on a collision course with other members of Prime Minister Giorgia Meloni's ruling coalition, who've been critical of attempts to accelerate the sale of the world's oldest bank. Joining us now is Bloomberg's Milan Bureau Chief Tommaso Ebhardt, who can help us pick this story apart. So why is Italy then discussing the sale of their stake in Monte dei Paschi and other assets, Tommaso?
Sì, buongiorno again from Milano. So the answer is quite clear. Italy needs cash. The economy is doing worse than expected. The government led by Prime Minister Giorgia Meloni has already made some plans to invest state money. For example, they announced the acquisition of a 20% stake in the Telecom Italia network. They think it's very important for the Italian economy, so they have to find space for it. And that's why they are discussing the sale of several assets, including Monte dei Paschi di Siena. These words by Antonio Tajani are having an impact on the market. The shares of the world's oldest bank are now falling in Milan, because analysts are worried that Italy will accelerate the sale of Monte dei Paschi without finding a strategic partner, and this means they could eventually even sell a stake on the market. This is what analysts are saying this morning, and this is why we are seeing now the shares going down.
So this is what analysts are saying. Why is Meloni's government then in disagreement? It seems different parts of the coalition think differently on whether there should be the sale of this asset, the world's oldest bank. Why do they differ in their views?
So Italy has to sell Monte dei Paschi by the end of 2024. The question is doing it now or doing it later. Quite interesting. Tajani came as a surprise, saying we need to do it right now. We want less state into the economy. We have seen under Meloni that the Italian government want to have a bigger presence in the economy. So there is a big difference here. And the League, who is very close now to the Monte dei Paschi dossier, is saying, you know, don't rush. We need to find, you know, the right solution. This is why there was such a stir. There was such a stir in Chernobyl after Tajani's comments.
Okay, yes, quite a lot of fallout then from his comments. Thanks, Tommaso. Thanks for the update. Bloomberg's Milan Bureau Chief Tommaso Ebhardt with the latest on Italy and its finances. A crisis is brewing in the European rental market, and it's also a major political issue. Bloomberg's Alice Cantor explains.
Across Europe, a crisis is brewing, one that is set to snowball and become a major political issue, and one that threatens the roof over your head. price of rent has shot up across cities in Europe, but what's behind this? At its core, it comes down to one of the most fundamental concepts in economics, a mismatch between supply and demand. That's whipped the market into a frenzy. Too many renters chasing a dwindling stock of properties, with the poorest bearing the brunt. On the demand side, a major factor is migration. More people than ever are being crammed into Europe's biggest cities, driving up the demand for rental properties. Brexit, the war in Ukraine, and the unraveling of COVID restrictions are all factors causing more people to move. Higher mortgage rates have also caused the demand for rental properties to rise as home ownership becomes more unaffordable. On the supply side, landlords facing higher mortgages have opted to sell up, chipping away at the rental stock and worsening the crisis. So why not just build more houses? Well, that's easier said than done. High inflation has driven up the cost of materials, hampering construction as home builders feel the pinch. In Europe, these factors are multiplied because of the number of historic and low-rise buildings, and cities tend to be relatively small compared to US cities. It's a combination of factors which is turning up the heat on the rental market in Europe. It threatens to exacerbate inequality and has already begun to stoke political tensions, including in Lisbon. It's a perfect storm for the rental market, and it shows no signs of abating.
Bloomberg's Alice Cantor reporting on the rental market in Europe. Let's have a quick check on what we see in markets this morning. And we have European equity markets in positive mood this morning, up by 0.9%. The FTSE up by 0.8%, as is the CAC 40. The Xetra DAX not very far behind. And in terms of the sector breakdown, basic resources, the best performing sector, but technology, consumer products and services also trading higher. In fact, no sectors are in negative territory today on European stocks. We're being pushed higher by better sentiment coming through from China and the China market reaction to housing sales data over the weekend, but also around Fed expectations. So those are the explaining factors, I suppose. Coming up on the program, we'll talk about Ukraine, change in terms of who's the defense ministry. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacroix this morning. Let's get to your top stories. European stocks are lifted by China's latest stimulus measures and wages US interest rates may be approaching a peak. Italy's Deputy Prime Minister tells Bloomberg the country may look to hasten the sale of Monte dei Paschi amid Rome's proposed move to offload some of its holdings. Plus, Ukrainian President Volodymyr Zelensky overhauls his wartime cabinet by removing his defense chief. We will hear from Zelensky's chief diplomatic advisor shortly. Good morning. Welcome to The Pulse. I'm Anna Edwards in London. Now, SoftBank, the business that they have backed, of course, for many years, Arm, kicks off its roadshow this week, and the company is expected to list its shares publicly this month. The IPO could be the largest in the tech sector since Alibaba, but it could mean the appetite for public, or could it mean the appetite for public listings is back? Sonali Basak reports.
The IPO freeze is starting to thaw. Japanese giant SoftBank is looking to list its giant chip designer, Arm, in what's meant to be one of the biggest U.S. tech listings in history.
It would be the biggest U.S. tech listing since Rivian, which raised almost $14 billion in 2021.
IPO deals picked up steam from 2019 to 2020 and then peaked in 2021 at a whopping $338 billion raised for fresh stock sales, with more than 1,000 companies going public. But when the Federal Reserve started to raise interest rates, new listings fell off a cliff. With only roughly $14 billion raised through August of 2023, the market stood at the lowest since 2009. Venture capital investors, from Andreessen Horowitz to Tiger Global, are hungrily looking to cash out on some early wagers, while private equity-backed firms like Birkenstock are also seeking to change control. Arm is no different. SoftBank has owned it since 2016 and is ready to start finding a way to start exiting the investment. The valuation for Arm in its IPO is slated to be a large jump from the $32 billion it stood at 7 years earlier. But through the market doldrums, some of the IPO hopefuls have already lowered their valuations.
Grocery delivery company Instacart slashed their $39 billion valuation to $10 billion late last year.
There's a silver lining to those valuation drop-offs. It means that when the companies finally do hit public markets, investors can buy in at a lower price tag. However, their worry is still that 2023 and 2024 could bring more market volatility ahead, and that perhaps they've still bought in at too high a price.
That was Sonali Basak reporting there on appetite for IPOs. Let's turn to geopolitics. Ukraine's President Zelensky says he's removing his defense chief, Alexei Reznikov, after allegations of corruption in military procurement. This while Turkey's Erdogan meets with Russia's President Putin today to discuss a new grain deal. Joining us for more is Bloomberg's Europe correspondent Maria Tadeo. Maria.
Yes, Anna, good morning. And obviously, big news for Ukraine. You have this reshuffle that's going on at the defense ministry. The war, as we know, continues to go on. Ukraine says it is making, slow perhaps, but it is making progress. And of course, this week you have both the talks on the grain deal, but also the G20 summit that is coming up, where we know once again it will be a topic on the agenda. Ukraine, can they get a communique? It has been difficult over the past editions, but the Indian delegation that is hosting this G20 hopes that they can lead and end with a communique. So to debrief all of this in a very busy week, we are joined from Ukraine by Igor Shovko, who is the diplomatic advisor to President Zelensky. And Mr. Shovko, obviously we've seen these changes going on at the defense ministry. I know that this is not something that you're directly involved with. This comes with the president himself. But I wonder if there's a message to the international audience that is seeing all of these headlines and all of this news, what it means when it comes to Ukraine, the war. And I know fundamentally there has been major drives from your government to be seen as being very tough on corruption. You need this for your credibility and your reforms. Does this stress that message that you've talked about for a year, that you're taking this seriously at government?
Look, Maria, thank you for having me.
Minister Reznikov has done a very good job for about more than 500 days of the wartime. You see that Ukraine is now gaining the arms, it's gaining the support, it's gaining the ammunition. This was not happening, unfortunately, before the open aggression of Ukraine, and immediately after the open aggression of Russia to Ukraine. Only after several months, we started to receive in numerous amounts this what we are receiving now, and that's what allows us to have made already several major counteroffensives, and now we are having another very important counteroffensive, which is going on as it goes on. I mean, this is not a Hollywood movie. You cannot do it within one day, but very important, this is going on. So the president is making his decision. He is absolutely right. He's chief military commander of the country. So we are hoping that the tempo of the counteroffensive will be increasing, and definitely Ukraine needs to achieve very significant results in the near soon.
And Mr. Shevko, just to end on this subject, of course, a counteroffensive, the defense ministry is important for a lot of the contracts and supplies, but it really is the generals that handle the operation on the front line. Is this going to have any impact on the counteroffensive, do you believe? And I wonder, too, your foreign minister, Mr. Kuleba, last week, he was very open about what he believes is too much criticism, everyday commentary on how this counteroffensive is going on. And he said, again, it doesn't play on Twitter time, it's happening in real life, and critics will be proven wrong. Do you feel perhaps there's too much negativity about this counteroffensive?
Well, again, like you said in the beginning, I'm not directly involved in the planning of the counteroffensive. That's up to the military people and the generals you mentioned. I don't think there will be any significant changes in the relations on the military field amongst the military commandment. Criticism is always at place. Ukraine is a democratic country, and you're a journalist yourself. You know how journalists like to go into any single detail, to criticize, sometimes for the slow pace, sometimes that something is not happening. Let's leave the pieces and the particularity of the counteroffensive to the people, to the professionals. When the result will be in place, and the result will be definitely in place, we will be first to see and command and to commemorate the victory of Ukraine.
And Mr. Shevko, also going on this week, equally important is the grain deal back in focus. Remember, you had agreed to this grain deal with the United Nations. Turkey was also involved, and then Russia pulled out of it unilaterally a month ago. That deal now, for the time being, has been, broken. The hope is for it to be reinstated. I wonder, do you have hopes that President Erdogan can reinstate this deal? Have you had any talks with the Turkish delegations? Because they're the ones that are going to Russia with a message for Vladimir Putin, which is, again, to reinstate the deal.
Like you rightfully said, Ukraine has not withdrawn itself from the deal we are having with Turkey and the United Nations. And that's why we continue, we are trying to continue the existence of the grain deal. We are working on the alternative routes, and you might have seen in the news already that several vessels are already using this alternative route to further export Ukrainian agriculture products. At the same time, yes, we know about today's meeting, and several representatives of Turkey were in Kyiv a week before that, including the foreign minister, Hakan Fidan, who knows absolutely well the position of Ukraine. And yes, definitely we count on the Turkey's position to support this grain deal. It is not only for Ukraine to have this grain deal. It is only for also for the poorest country of Africa and Asia. We were exporting throughout the last year more than 30 million tons to these countries, and we are ready to do this. Again, the crops in Ukraine this year is quite good, so we are ready. We are ready to be a world's breadbasket. Even in terms of war, Ukraine is suffering from Russian aggression, and the world is suffering when Russia uses aggressive instruments in the food security area.
So just very briefly, you trust that the Turkish delegation can get to a breakthrough. That is your expectation, based on your conversations with them?
We trust that Turkey will do everything possible and impossible on this regard.
Well, thanks for that. And that takes me now to the second part of this Green Deal, because as you know, Mr. Shavkwa, you're also exporting, or we're exporting to a number of European countries. Then there was a restriction on the number of exports that you can get. This was led by a coalition of European Union countries, including Poland. Now, do you believe those restrictions will be extended over time? That would be detrimental to you? Are you having any conversations with the European Union about not extending it? What sense do you get, especially from the Polish, on this?
That's unfortunate development of events, right? You are our nearest partners, including Poland, were introducing these unilateral restrictions over Ukraine's trade. You remember several months ago. Now we have the decision, the resolution of the European Commission, which has to cease its existence exactly on the 15th of September this year. And we hear the position of President Ursula von der Leyen, which she communicated several times to my president, that after this period, these European Commission restrictions will not exist. We have to save the principles of free trade. Ukraine and the EU has the association agreement, and part of this association agreement and deep and comprehensive free trade area between Ukraine and European Union. So it's important to stick to the rule of the European Union. It's important to stick to the association agreement. Ukraine, again, in times of war, is producing and exporting and transiting its products. And we should live in the free market economy. This is the principle of the European Union.
And we'll see on September 15th, because that's around where that decision will be made, potentially restricting that grain or not. Mr. Shavkwa, just as a final question, however, we know that the G20 is happening this week. The Indian delegation that leads those talks, or the host, they say they hope there will be a communique about Ukraine. We know there has not been one because of some of the tensions at play at the G20. I have two brief questions for you. You travel with President Zelensky. Is it the case that President Zelensky will attend this G20? Is he considering to go? And then secondly, on the G20 aspect of this, you've said you need to reach out to global South countries. With Brazil, you still don't have your meeting. You've not talked to President Lula. Why is this becoming such an issue for you? Is there something that they don't understand about you, and is there something you don't understand about them?
Well, with President Lula, by the way, my president not only met during the Hiroshima summit in the broader meeting of the G7 plus Global South countries panel, and they talked, by the way, about the peace formula. The peace formula is this is the platform where we involve in the Global South countries, not only Brazil you mentioned, but also India, Saudi Arabia, South Africa, and China. China was present at the last meeting of National Security Advisor in Jeddah. The G20 meeting is taking place. Ukraine is talking to the partners. We know that the Ukrainian case should be raised at this meeting. It's impossible now during the times of Russia's aggression against Ukraine just to talk about the issues of economy, geopolitics, not mentioning, not touching the subject of Ukraine. So I do hope that all the global powers which will be present at this meeting will not only talk about Ukraine, but will talk about possible instruments how to end Russia aggression in many areas. Once again, not only in food security, in environment, in energy. This is
but yes or no? But yes or no? President Zelensky may go. Is that something that you contemplate? If you
certainly, I will not reveal you future plans of President Zelensky. Sorry for that. It's a security issue.
Well, and of course, we'll have to wait to see at the end of the week. Mr. Shavkwa, thank you so much for joining us on Bloomberg TV on a very busy morning. We always appreciate you coming on the show. Thank you so much. Anna?
Maria, thank you very much to you as well, Maria Tadeo, bringing us that interview, that important conversation around Ukraine. When we come back, we'll get back to the corporate news flow this morning. I'll be joined by the CEO of Moleskine, the maker of the iconic notebooks, as we ask, is the world still in love with pen and paper? This is Bloomberg.
top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year, and we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
We've all been there. You get invited to go to Kyrgyzstan, where you're turned into a YouTube kids show star. Build a satellite and play a game with a goat. The point is, Hello World is back, and you should watch it. Thursdays on Bloomberg Originals and Bloomberg TV.
Welcome back to the programme. This is The Pulse. I'm Anna Edwards in for Francine Lacroix this morning. Now, Moleskine made its name by reviving journal notebooks, which became a favourite within the creative world. Today, the challenge for the mid-sized Milanese company is to keep old customers and win new ones by promoting the value of handwriting on paper in tandem with digital devices. This weekend, the Moleskine Detour exhibition opens here in London at the Saatchi Gallery, I understand. I'm joined now by Daniela Riccardi, who is the Chief Executive of Moleskine. Daniela, nice to have you with us. Thanks for joining us. Talk to me about how you combine writing on paper and the digital world. How do you start to think about that?
I didn't start to think about that. I inherited this beautiful thing that is handwriting and sketching, is where the human capital is. In the 90s, a group of friends created the Moleskine brand as a hair of the petit carnet noir used at the end of 19th century, the beginning of 19th century. And it keeps going. I mean, handwriting and sketching is the best way to transform idea into realities, to bring them to life. And people keep using it.
Okay. I mean, there must be challenges, though, with new generations, younger generations, increasingly tech-savvy generations who see a lot of their life online and in the digital space. How do you keep it relevant?
You know, I try to be with consumers all the time, and I myself created a Gen Z board within Moleskine. So I have about 20 kids, around 20 that come from university. Some are interns with us, some are already employed by us. And so they give me all the needed information and to make sure that Moleskine can stay relevant to that generation. And you know, when I visit university, I see students, about 20–30% of them still writes, and the most precious moment of their life, their thesis, it's all written on a Moleskine.
And so what do they still feel they want to do with pen and paper for these Gen Zs? Is it around art, or is it around diary keeping? Where do you find their appetite?
Both. I mean, journaling, as you know, is very popular in general, and particularly in the Gen Z. But also, I think they want to record the most important moments of their life. That's what all our clients do until they are 90s. And the Gen Z do it too. And they do it next to their digital device, and that's okay with us. We have a smart Moleskine where you can handwrite on paper, but immediately shows on a digital device, and you can just push a button and it goes by email or by WhatsApp to your friends. So, I mean, it was born in the digital era, and it continues to be, I think, the best partner of a digital device.
Okay, so some digital adaptation. You sit within a global economy, of course, that has been pushed around post the pandemic by a number of forces. One of those is inflation. How do you keep the cost of the raw materials that you need to use? How do you keep a lid on those costs? How do you keep those under control?
Of course, inflation is always, it creates problem for any company, a lot of attention to cash, to inventory. But I have to say, we've been working with the same suppliers since the start of Moleskine. We are loyal to them, they're loyal to us. I think we have a privileged position, so thanks God we managed to keep, there was increase, we managed to increase, but our production and our supply has not been disrupted.
So it wasn't disrupted, so there was no issue with your supply chain?
No, I did some crazy things a couple of years ago, a year and a half ago. During holiday period, we realized that there were no containers, so for the first time ever, I sent Moleskine by plane, but I made sure our clients had it on the shelf.
Okay, thanks so much for joining us. Really nice to check in with you, Daniela, this morning. Daniela Riccardi, Moleskine's CEO. Coming up on the program, the race to dominate the global EV market heats up. We're live at the IAA car show in Munich. More on that shortly. This is Bloomberg.
What do you worry most about your economy in Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to